perspective as a trader on the floor, having a trade setup on that pair, right? I'm going to do that. I'm just showing you guys how I take trades and how this thing is just simple. Looking at the same thing every day, every time. Even GBP, NZD, both of these ones, both of them, they happened yesterday and it was quite awesome. I mean, you seeing the same thing happening. Yes. Where is it? 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 Exactly. Yeah, this is it here. See, this guy here, we had a sweep of this guy. A sweep of this guy. We expect this guy not to be broken because what? This is how you know the level that will not be broken, at least immediately. Eventually, it might be broken, but for that moment, it will not. It will not. I told you that was 2 weeks ago. I said 9 out of 10 times it will not be broken at that moment. Eventually, probably price is kind of very bearish, and this guy will be violated later on. But at that moment, it wouldn't. Look at it; it's already violated. But I'm saying when price was still, yeah, this is the exact thing. I'm saying when price was still coming freshly to this point here, this main point is this way. Yeah, and this one is 3. So this is the same thing I was looking at yesterday. The same exact thing, guys. It's like this this is what I'm looking at across all my peers, whether gold, whether Nasdaq, whether US30, whether currency pairs. This is exactly what the model I'm looking towards to see. If I don't see this, I don't take trade. Let anybody be saying anything on the floor. I don't take trade personally. You get so. This boils down to what boss was saying yesterday. Find one setup that is good. Find one setup that you have data backing it up, statistics backing it up that okay, 60% out of the time it works, 70% out of the time it works, and then stay there, master the in and out of it, master what you want to see, what the things you want to see on the chart before you take trade. If they don't happen, don't take any trade, right? So I'm just showing you the trade I took yesterday, some of the trade that happened yesterday. What am I seeing today? Let's go to US30. Let's go to US30. And I'm not saying this to form a boss or form something. There are days where it's my SL2. So I know it's part of the game, right? I just want to ensure that my wins are more than my losses. My wins are more than my losses. So structurally speaking, from the higher time frame perspective here, we saw that this guy has been printing new highs. Yes, yes, 30. Been printing new highs. Like it's been bullish. It's visible to the blind and audible to the deaf that this guy is bullish. It's on a bullish move on daily time frame. Each one the same. There's nothing special on each one that we can see except for this place. Yes, and this break of structure here, which is still kind of still bullish because this has not been broken yet. Let me mark this. This is a lower high on that sorry, higher low, right? So this is the higher low that was broken, this guy here. But ultimately speaking, if you use your trend line, I don't use all of this for the sake of this session. Where is it? Okay. Thus, you see, it is still bullish to the upside, right? But then we can begin to see when you come on a 1 hour time frame, you begin to see some sell opportunities, things that look like sell. Okay, what are you saying now? I'm saying that structure has been broken here, right? Structure has been broken here. The first structure was broken here. From this point, we're supposed to see from this point, this guy creating a new higher high. But what happened then? Broke this structure, right? And then broke this one again, right? So I've seen a semblance of my setup here. And what am I seeing? It's clear, it's obvious. For a sell, I'm going to show you the model for a sell and the model for a buy. So you have clarity. And I'm not saying this to say once I now explain this setup, you now go and load your lot size 50 lots, 80 lots. Please calm down. Calm down. Apply proper risk management. There's a sweep here, right? A sweep here, right? And that sweep makes this guy protected high. Makes this guy protected high. Before we broke this structure, we saw that price created a form of lower high, right? Which is pretty the same kind of setup we're looking at. What do we expect price to do? We expect that when price gets to this place, once price gets to this place, this for a sell bias. I have both for sell and buy bias on US 30. This sell is just how will I put it? Just is a minor trade, not over. I'm not holding it for long time, except if I see structure begin to create multiple lower lows and lower highs to the downside. So I'm looking at 1:2 for a start, 1:2 for a start, and then 1:3 ultimately. Right? I'm looking at this sell model. I'm looking at this sell model. I don't like have my pending order set already. I don't use execution. I use pending order because I don't know where price will get there. So I have my pending order set on this already. And also for a buy model, right? For a buy model, what do I see happening here? Let me adjust. What do I see happening here? We saw that price pierce through this. Saw that price pierce through this previous low, higher low, right? Price pierced through this place, and then what did we see? Went up, created a higher low, right? Broke structure here, and then creating multiple structure to the downside. This trade, I can be so confident to hold maybe 1:4 on it, or 1:6, kind of, because it aligns with the overall what's it called? Trend of the market, right? This is it here. Overall trend of the market. So what am I looking forward to see in this market? I'm looking forward for price to come. I thought it was even going to do that maybe overnight, but then because there's no volume, enough volume in the market. So okay, around there. Don't want to see probably 1:3, 1:3, somewhere around there. It can go all the way, because if price eventually come to pick this order, I'm telling you, it's going for this guy here. And then if the market is not set to start selling, you are piercing through all of these guys and then going all the way to create a new high ultimately here. So that's 1:7. So whichever way the market goes, I'm still winning, right? Because I have 1:3 here, and I have a potential 1:3 again. Let's be modest. The potential 1:3 on this place. So whatever the market does, this is my setup for US 30. This is what I'm watching for this week after my trade yesterday, GBP, CHF, and GBP, NZD. So this is the same structure and liquidity. It happens every time. This same setup can happen in the lower time frame, like I said earlier. It do happen, of course. It's just that for more clarity and for my own personal experience in trading, I prefer I take this setup on H1 above, H1, H2, H4, and the rest like that. So this is the setup I'm looking at for today. Our US 30 brethren, our US 30 fellas. What is a sweep? Can you explain for we the newcomer? Okay, a sweep is just another name for grab of liquidity. Okay, let me use an example here. This thing that happened here, let me use the box. This thing that happened here, this was, price is going higher high, higher low, higher high, right? And what happened? We saw price tanked and then swept through this place. This thing here is called a grab of liquidity. Some will say it's a sweep, any name you use for it. Some will say it's a break of structure. This is actually not a break of structure, because we didn't see this one break to this downside. But some can still call it a break of structure, BOS, right? So, but that's what we mean by a sweep. It's another word for liquidity, grab of liquidity, and the rest. So That's it. Concerning today, this is what I'm looking at, guys. US 30. I'm looking at, I have a buy bias on US 30. I have a sell bias on US 30, guys. So I'm looking patiently at the market, seeing what it does, whether it's going to come to the upside by 2:30 New York Open. I should see enough volatility to drive price either to the upside or downside. Again, like I said, this is not a all know it mentality. I'm just saying there's a possibility that this happened. And from my own edge in the market, I've seen this happen over and over again, over and over and again. Like I showed you on GBP CHF, GBP NZ, is the same thing I'm looking at. I'm not looking at fair value, not to say it works, guys. It works. But has shown us this thing over and over again. But personally, I'm not looking at fair value gap, other blocks, and all of those extras. This is what I'm focused on, and I've seen it happen over and over again. It's my edge in the market. Right? So I'll be handing over to my colleague. Please, if you have any question, you can ask before I leave. Why is your order at the extreme and not within the other block? Why is your order at the extreme and not within the other block? Okay, please, can you explain what you mean by order at the extreme and not the other block? I don't know what you mean by that. Is it this place, this session here, or where exactly? If you can break that question down, the sell order, yes. Order block. All right. So the idea around the setup is price will always come. It's not about whether it's an order block or not an order block. I use order block when I'm trying to refine my entry within these zones, within these red zones, not even these green zones. The reason is, what's your name, sir? Where's the entry? Where your entry is, there's an order block here. Goodness, I'm trying so hard to understand this question, but I'm not getting it. Okay, my name is Demola Glover, right? So I saw that question here. Guys, please let's focus on what we've been taught here. It's the same strategy. Let's just focus on what we've been teaching, which is shoulders. It's still the same thing. Grab of liquidity, shoulder, and then looking for FVG or imbalance, area of imbalance, and then selling from there. This is just a variation of that, and it's still the same thing, right? I'm just giving us a breakdown of how it works. So you're saying, why am I taking trade from this place? This is the last lower high to be formed, and algo market structure. It's like, it's not a principle, it's not a rule. It's just from observation in the market, the way the algorithm price what's it called? Price is it's way up and down. It's going to come and take out this last higher low, lower high. Sorry, this last lower high for a sell. It's going to take out this last lower high. Doesn't matter if another block is here or another block is sitting here. You might just see a little reaction, and that's what you're seeing already, right? Price is reacting from there, just having a little reaction. People can sell. I mean, there are strategy that is built around this only, that once you get here, you sell and then you exit as a very quick flip. But I'm saying, okay, I think probably when my colleague comes, he might even have better understanding of this question, because I'm trying so hard to. He said, I think it means your stop loss is below at the week instead of the open of the candle. Stop loss of the week. Yes, it has to be at the week. This one, it has to be at the week though, obviously, because price can still come all the way, even at towards the open of the candle, and then still take you out. Still reverse, I mean to say. So the question you asked about why I'm placing trade at this point, at this lower high, instead of this other block, is just simple. This is the strategy, and over time, price will react a little bit at this other block, which is normal, before it goes to the upside and then crash to the downside. It's exactly the same thing. I think we've had this conversation before. One time, Mr. Femi asking me, is here started going to tank or so? Like that. It's purely the same type of setup happening over and over again. right? It doesn't happen every time, but once it happens, you're good to go. All right, guys, that will be all for today. Please, for any other question, what if price takes the higher high before dropping? So technically speaking, truly there's a possibility for that, and that's where risk management comes in, right? But I'm saying over time, once we see this happen in the market, price most likely will not take the high at that moment. Or if it's going to take the high, we see price move 1:2 in your direction, 1:2, 1:3 before we see before we see price take that high. A typical example is GBP CH, is it GBP CHF or CBTNZD now? Let me try and get that. On I hope it is. Okay, yes, this is a typical example, right? A sweep, and then price created a higher low and then broke to the upside, and then we saw price coming back to tap there. Eventually, now today we've seen price taking out the low, this low that was protected before. But I'm saying before it took out this low, look at it did 1:3, and this is all I need. I just need this to happen. I'm not after the whole exact move. I just want to get my 1:3 and then leave. You get. So that's all for today. Please, I'm handing over to my colleague. Thank you so much, and God bless.
Good morning, everyone. Once again, we hope you are having a wonderful week already. This is midweek, and many a times during this midweek, we usually experience what we call midweek reversals. So, this is the week where we need to watch the chart afresh, or this is the period in the week where we need to watch the chart afresh. Because if you're looking at the chart from a top-down analysis perspective, you will need to look at higher time frames and make reference to them. Okay, so in a bid to get clear sentiment on the dollar generally, we would have to look at the dollar index so that we'll have a clear sentiment on the dollar generally. So looking at the dollar index, sorry for that. Looking at the dollar index, we have, oh, okay. Thank you. Thank you. So looking at the dollar index, we are seeing that on the daily time frame, price has broken the high that we anticipated. Since on Monday, I think on Monday, we said we're looking to go long on the dollar. That is invariably saying we're going short on GBP USD and Euro USD. And when we get to those pairs, you'd see how far we've gone, right? With the analysis that was given. So, so looking at the dollar index, we said we were anticipating a break around here, and we've seen that happened already. So clearly, for the rest part of this quarter, we're going to be looking to go long on the dollar index for the major part of this quarter. Right? So that is to say, from February through to March, I'll be looking overall for my swing positions. I'm going to be looking to maintain a long on the dollar. Okay, so now, definitely after a break of structure, we would want to see a retest. Or some people will say after a grab of liquidity, we want to see some retracement. Whichever language you see it, just know that price has taken out this high. We want to see a return, and most likely it's going to be inside of this order block. We may see that retest somewhere around here. And when that happens, we'll be resuming our long on the dollar. Okay, so if you look at the 4-hour time frame, so this is where we're expecting the dollar to trade into on the daily time frame. Once it does this, I'll be going long on the dollar. So if you look at the hourly time frame, 4 hours, you can see that there was a very wide range that was created. Okay, so what I said we should do is to mark 50% of this whole move, right? 50% of this whole move, and then we can place a horizontal line there and anticipate that the index is going to retrace all the way to that level. Okay, we can take this off now. Okay, so this is where I'm expecting the index to retrace into. If you go back to the daily time frame, you're going to see that, yeah, it's in that daily order block. The daily order block is coinciding with the fair value gap on 4 hours that is very wide. So I would want to see price trade into this level, somewhere around here. And when price does that, would be going back long. So what I want to see is price trade into this level. When it trades into this level here, either of these 2 points of interest, I would want to see 1 hour or 30 minutes structure shift to the upside. When that happens, I'll be going long on the dollar. So currently, I'm short on the dollar. I'm looking to take long positions on Euro USD and GBP USD as at this morning, but I want to see some deep retracement. This is not in direction of the market. This is reverse trade. We are not taking trade in line with the trend. Okay, so we are counter trending. So that is not going to, what I'm saying in essence is that those kind of trades are not going to last for so long. We'll just be looking to grab minimum 20, 30 pips and we're out of the market. Okay, so this is what I'm seeing on the dollar index. You trade into this level. Let me keep a path there that will make reference to maybe in the future. So I want to see a trade into that level and then a trade out of it. Okay, so I'll sell into that level and I'll buy out of it. That's what I'm saying in essence. I hope that is very clear. So let's look at Euro USD and GBP USD. Looking at Euro USD, like we said, there was a markup we kept somewhere around here. So we said we were expecting, that was on Monday, I think. Yeah, Monday. Said I'm expecting Euro USD to buy all the way to this place. It took a while, but currently you can see it's buying right now. So on Monday we said we were expecting a sell, and then into the remaining part of the week we're expecting a retracement into this level right here, this exact level that we marked. And we'll see, you can see that Euro USD is forcefully rallying all the way to that level. Okay, so I'm going to be buying Euro USD all the way to somewhere around here. Okay. That's very clear. We already know our overall bias. The buy is a buy to sell. By the way, Euro USD also created some form of liquidity somewhere around here when it gave us a double bottom. And since that liquidity has been created, we'll be looking to grab liquidity whenever we return to this level. Okay. So this is what we are seeing on Euro USD. We're anticipating a buy to sell on Euro USD. So if you are taking note of that in your chart, so what I usually advise all of us to do is that when we are doing these projections, while we are doing these projections, you can open your chart and be making the same projections on your own chart so that when they play out, we don't even need to come here and tell you it played out. You on your own, you would see it live and direct that it has played out. Okay. So this is what we're anticipating on Euro USD. Buy into this level and then short to take out this low. Okay, buy into this level, then a short to take out this low on Euro USD. So I would have to highlight that low so that we'll see it as our next target. All right, so this is the next target of Euro USD here and here. So I'll be buying Euro USD all the way here and I'll be selling it further downwards. Okay, so that's just it on Euro USD. Nothing much to say currently. I'm looking out for a buy. I would want to see price take out the low of the day. That's for today, the low of today. If price does that, then I'll be looking for a buy on Euro USD. Okay, so this is the low of today. So I would want to see price make a sweep of this low. Once it takes out this low of today, I would want to take a buy on Euro USD. So I'm suspecting that's going to happen. It's a suspicion, but this kind of trades we need to analyze and even over-analyze in many cases. All right, so if that doesn't happen, I'll wait for a buy signature somewhere around where price currently is, around this exact place where price currently is. If I see a buy signature, I'll be going long on Euro USD all the way to the upside. Okay, so that should be about some decent 30 pips. Oh, 50 pips. Wow. So it's going to be a good trade when it finally plays out. So I'll be going long on Euro USD to somewhere around here. I want to grab all this liquidity residing here, trade into this internal liquidity, and that will be all. Okay, so for today, we're going long on Euro USD. Once we see our buy entry signature on Euro USD somewhere around here, I'll be going long. Okay, if it doesn't give me a buy entry signature around here, I'll wait for it to take out the low of today. Once it grabs the low of today, I'm going back up. Okay, now I know that is clear. I believe so. Now, looking at the pound dollar, which will be the final pair we look at this morning. Just so you know, we usually like to keep the TDA short, except in some cases where we have a lot of questions we would want to answer. We like to keep it short so that you can rewatch it and also you have time to go back to the chart and execute the things you've concluded on based off the top-down analysis. All right, so looking at the dollar GBP USD, we also said on Monday that we want to see GBP USD trade down and take out all this level. I don't know why the chart markups keep getting erased, but for GBP USD, we already said, hold on, please. Let me get this. Okay, so for GBP USD, we said we're anticipating that it trades into this order block and buy. So that buy setup has been executed. So you can see it here. So on Monday, we said we wanted to see GBP USD break all these lows and trade into this order block. Okay, and after trading into this order block, we should expect a reversal into this order level here, similar to the Euro USD. Okay, so let me change this to red so we know we're indicating a sell. All right, so this is it. I don't know why it's erased, but if you remember on Monday, we said we were going to trade GBP USD all the way into this level. So we sold GBP USD, now we're buying GBP USD. We're buying all the way to this level. Okay. Now, for me, I would advise not to just jump into the buy if you're not already in. I would advise you wait for a brief retracement. Check on the 1 hour. You may see some brief retracements, maybe to this level, maybe to this level right here. Okay, so we may see some brief retracement, maybe to this level right here. Okay, if that doesn't happen, then we may see price take out the low of the day. But overall, I think the best time to have taken this trade was when price tested this order block and started rallying to the upside. All right. Well, nevertheless, if you're not in, wait for a deep retracement, maybe into this level, and then you continue. If that doesn't happen, just wait for price to trade into this level here. Then you wait for correction around this level right here, and then start selling GBP USD off. So that level right above is between 1.27275 and 1.26845. Okay. So you can approach this from a swing mindset. So you just take the trade from here to all the way to this low. So you relax and let the trade take care of itself. Once you see a good entry here and you're not stopped out, just ride the trade all the way to this downside. Okay, so the moment price trades into this level, look at the 1 hour time frame, look at the 30 minutes and possibly the 15 minutes time frame. That is called microstructure. If you start seeing change of structure to the downside, then you can start going short on GBP USD. All right, in another case, we may see GBP USD trade all the way to this left shoulder right here using the box strategy. All right, so that has been overemphasized in previous top-down analysis. So using the box strategy, we may see GBP USD all the way to this level right here to tap on the left shoulder because it was sweep to the upside and the sweep to the downside. So based on the 4 hours and 1 hour time frame, using the box strategy, we may see GBP USD all the way here. So GBP USD has a long way to buy to, all right? All the point of interest are quite far currently. If you can measure it using the 53 pips and 100 pips. Okay, so GBP USD still have between 53 and 100 pips to the upside. So if it's clear for you, you can take a short, you can take a long position on GBP USD all the way to this level. But mind you, we are counter trending, so we need to apply proper risk management. So with this, we'll come to the close of today's top-down analysis. But before we close, good morning, sir.
Good morning, CJ. Good morning, everyone. I hope you got value so far, as always. My guys are always representing, always. If you got value, let's know. I got value, I got value. I got value. CJ.
Sir.
I saw you shaking tables on your Instagram. Well done, no?
Yes.
Well done. So you've done the analysis on GU. What do you say?
If we don't do it, nobody will do it.
Yes, so nobody will tell them the truth. It's okay to be a marketer, but let's do this thing with small fear of God. So any questions for me? Any question for me? If not, we'll just wrap it up. I've seen you've already marked the fair value gap. That fair value gap is going to be very tricky. It's going to be very, very tricky. I'm looking at your schematic. You know, the fair value gap is at least 100 pips.
Yes, sir.
There's an IOFED there. So knowing which of them it will tap into. You see that candle, that news candle of yesterday, of Friday, that NFP candle. You will have to look at that high and low. You will have to look at it on the 15 minutes throughout. Once price enters above that stopper shocker that was formed on Thursday, you can see the stopper shocker. Sell, buy with the doji. Exactly, 1.2655. Once price enters above that place, right, where that IOFED starts, just leave it on 15 minutes. Because this peep distance, so there are two things. You either wait for price to enter into that fair value gap and come out, and then you start trading again. So you look at that range, and once price enters that range, you leave it alone. Or you have strong sentiments. GJ doing well. Should I still hold the buy or exit? So that's based on yesterday, but my brother, it's not me that will tell you. I'll answer you one by one. Okay, so the breakdown for yesterday. Just keep listening. It's very straightforward. Shoulder, sweep, break of structure, then a retest to the shoulder, and then look for that same schematic on a lower time frame. It's very simple. So like this one now that we're looking at on the 4-hour, that's the shoulder, that's the sweep, that's the momentum break of structure to the downside. NFP gave the momentum break of structure to the downside. Now it is going back up to that shoulder to retest it. So let's take it again. The shoulder, that's the shoulder. The sweep or the liquidity grab, that's the liquidity grab. Liquidity grab looks like a move up, then you move back down. And it broke structure, forming the momentum fair value gap or inefficiency. Then price will go back to it. Price will go back to it, of which that's what price is trying to do. When it enters into the shoulder or 61.8 or the other block or the flip zone, then you look for this same schematic on a lower time frame. Shoulder sweep, break of structure, retracement or pullback to the left shoulder or to the other block of the break of market structure or to the inefficiency or to the flip zone, any one of those, or 61.8. I hope I've answered your question. This was the meaning of IOFED. Don't worry about IOFED. It's institutional order. What does it mean? Institutional order flow entry drill.
Yes, sir.
Institutional order flow entry drill. This is what it simply means. Anywhere you see a fair value gap, just look to the left of that fair value gap. Is there another fair value gap close by in the opposite direction? So look at this one now. There's a fair value gap of the buy. Then there's a fair value gap of the sell a few candles later. That combination of a buy fair value gap and a sell fair value gap side by side is called an IOFED. All right. So that's basically it. With regard to the GBP JPY, whether you should hold on to it or not, that's a function of sentiment this morning. That's a function of sentiment. Move your stop loss to break even. Move your stop loss to break even. Take half of the position out and leave the remaining half. Look for the opposite liquidity. So if price is going to go, all right. So look at this schematic now. Anytime price is pulling back or anytime price is moving, what's price targeting? Price is targeting liquidity, a recent swing high, or price is targeting a fair value gap, or price is targeting a flip zone. Based on this, where price is, it will stall there because there's an IOFED to the left on the second and on the third. You can see the fair value gap. There's a fair value gap there. There's a fair value gap there. Price can be going there. There's a flip zone there. There's a flip zone there with a failed order block. That's another flip zone. That's a flip zone there. There's a failed order block. That's another failed order block there. Because that order block was supposed to take price back up, but it didn't. Rather, it got broken. Yes, a failed reclaimed order block. That's it there. So these are all potential profit-taking levels. Another thing you can do is that swing, you look for 61.8 of the swing. 61.8 of the swing. 61.8 of the swing. Ivan Hyacinth, is there a cost? Yes, there's a cost now. Why are we doing this TDA? Is it not to show you value so you pay for the cost? There's a cost. Lekon will tell you or CJ will tell you about the cost. We have different courses with support. But like I always say, we tell you what we are going to teach you in the course. The only difference is when you pay for the course, number one, you will pay more attention. Number two, you have access to the instructor to interrupt and ask questions one-on-one. Number three, you have access to other people. Like on this TDA, there are some good traders. They are not talking, they are just watching. Some of them too have enrolled for the courses. So you have access to ask questions and build networks for collaboration, right? Number four, what's the fourth one? You join our community, you have the chance to get the support you need. Some of you will not learn. Some of you are gifted and you are good with charts and stuff. Visually, naturally, you are good with visuals. So you will learn it fast. Some of you, it may take you months. You have access to that support. Even after the course ends, you still have access to ask the trainers different questions. Look at now. Look at people on our floor. There are people that are students who can make it to Zaria. They are right there on the floor. They've done the training. It has finished, but they can come around. So these are the things you get. You understand? These are the things you get. And we always prioritize our students. So, yes. But this thing of training your eyes, my brother, is screen time. Go to TradingView, go to Go Charting, and play it over and over again. Use the replay button and see this setup over and over again. You will train your eyes to see it. You will train your eyes to see it. Okay? All right. So, exactly 61.8. So, these are the different levels where price can go to and you can execute. You can execute. All right? You can execute. So the only way we can know what price will do is to just observe. I have seen places where price wants to get to. For example, 186.98, price is going there. 186.98, price is going there. Why? There is a fair value gap there. You can see a fair value gap, and it's an IOFED. See the fair value gap on the right, where CJ's cursor is. There's a fair value gap at 186.75. There's another fair value gap. Yes, price is coming there. Why did I say so? It is 61.8. Number two, it's a flip zone where previous support was taken out. Number three, there's a fair value gap, IOFED. Look at the green fair value gap, 12 p.m. on the second. 12 p.m. on the second. That's a fair value gap to the upside now, there. Then 12 p.m. on the 5th. 12 p.m. on the 5th. That's a fair value gap on that side. That's an IOFED. There's liquidity there. Price will go there. Price is always creating liquidity or consuming liquidity. There is liquidity there. It will have to go and consume that liquidity. It must. So 186.98. Above 186.98, I don't know what will happen next because that's a box structure. Shoulder, grab of liquidity, break of structure, and a return to mitigate. So it's sentiment that will tell me what will happen there. So at that point, I'm no longer looking for structure again. I'm now looking for sentiment. What is sentiment telling me? And that's where our value flow models come in. I say it anyway. Apart from depth of market, footprint chart, market auction theory, which you can't get on MT4, there is no other way to do sentiment apart from our value flow models. There is no other way to do sentiment. Anything any other person is telling you is still structure, technicals, liquidity, except you're using depth of market, market auction theory. All these terms I talk about, you can be Googling them. That's the only method that I know from a day trading perspective that is superior to value flow models, and it's only for day trading. But if it's for sentiment, long-term sentiment, forget it. Forget it. So have I answered your question? Any other questions? So I hand it over to the guys so they can watch what their trades and monitor. No other question. No other question. But the way I'm seeing this price wants to blast through even that level and keep going. But don't take trade based on it too. There's analysis for analysis sake, and there's analysis for entry sake. When you see us saying some things confidently, it's just for analysis. So whenever you see us about to take trade, you will hear us speaking in probabilities. Once you hear us say it's going here for sure, we are not trading it too. Once you hear us say for sure, we are not trading it. If you see any of the instructors saying guaranteed it's going here, they are not trading it. When you see them taking trade, you hear them say things like, so most likely, or maybe that's the trade they are on. But once you hear them say guaranteed for sure, I can bet it to you their money is not on that trade. All right. Have you seen the line?
You don't cash.
All right. Okay then. Over to you, CJ. Thank you.
All right. Thank you very much for the evergreen value that you bring to the value flow, that you bring to the top-down analysis. And we hope everyone on the live call was able to get value for it, right? So for some people, they've been taking the trades that we've been calling. For some others, they've been watching the trades play out. They want to see how good we are first before they start taking the trades that we are calling out. Whichever side of the river that you are on, we just hope you're getting good value. And of course, you're going to get more value when you enroll for our courses. And most of our courses are channeled towards making you a better trader. And in the long run, with the support we're going to give you and the resources we're going to give you, will make you even a better version of yourself in terms of trading, psychology, in terms of understanding the charts, technical analysis, and sentiment, which is what we also teach in our sentiment course. All right, so that being said, I now introduce most of you who are new to the FX Bootcamp, which is our value flow trading currency course, right? And the FX Bootcamp is, will I say, one of the most evergreen courses you're going to find out there, in that there is adjustment, steady adjustment that is going on, steady optimization is going on the FX Bootcamp. There are new strategies, new entry signals, new entry signatures, newer curriculums that are being brought up in the FX Bootcamp. And one thing you should know is that once you enroll for the FX Bootcamp, there and then at the moment you enroll, training starts. Training does not wait till maybe a certain date. Training starts the moment you enroll for the FX Bootcamp. And then having access to the live TDAs, only those who are enrolling for the FX Bootcamp will get a live replay of the TDAs. They ask questions, and one special thing that we do for the FX Bootcamp students is that when question is asked, we organize a class for that question and we discuss it in depth until that question is answered and exhausted. Okay, so this is one of the few things you're going to get, and there is a whole lot more, just like Boss said, that you gain when you enroll for the FX Bootcamp. And then, if you're coming from the TDA group into the FX Bootcamp, I'm here to tell you that we have a surprise package for you. I can't tell you what the surprise package is. If not, it's not going to be surprising anymore. It's just like those Valentine bouquet that they use to surprise both the giver and the receiver. All right, so this is all we're going to say. Let's just leave it there until you enroll. When you enroll, your eyes will be opened. You are not going to eat any apple before your eyes is open. All right, and then secondly, on our courses, we have the ATM Plus training coming up tomorrow. If you know anyone who wants to take Forex training, if you know anyone you've been encouraging to take a Forex training and they are complaining of the fees and money and all that, tell them to enroll for the ATM Plus. It has been sachetized to the best level. The price is 30,000. Anyone can afford it. Almost anybody can afford it. So 30,000 is the price. ATM Plus. There's no cost that you pay 30,000 and an instructor will sit down and be teaching you. All right. So the course is coming up tomorrow. If you have anyone who wants to enroll between now and the end of the day, please make sure that they enroll. Even as at early in the morning tomorrow, you can still enroll. All right. So that being said, wish you good luck and good trading in the remaining part of the trading week. Right. And we urge you all to trade cautiously, apply proper risk management to all your trades. And talking about risk management, we have our robots for sale, and most of the robots have been optimized to manage your risk properly, right? Ranging from robots that pass your prop, robots that will manage your prop accounts, robots that will manage your live account. For those of you who are who are open to risk or who are aggressive traders, we have robots for you. Those who are conservative traders, we have robots for you. Those who want to just trade generally, we have robots for you. So whatever it is that you need in trading generally, we have all the solutions here for you at Value Flow Trading. So until we meet again next time, make sure you follow us on all our individual Instagram pages so that you get acquainted to us more. And then follow Value Flow Trading on Instagram at Value Flow Trading Hub. Until we meet again tomorrow, same time, 8:30 is the time. Come prepared. Wish you good luck and good trading. Cheers and God bless, guys.